Hey traders, happy Monday. It's January 13th. Welcome to the Weekly Outlook with Chris Pulver. Here we are talking about stocks, Forex, cryptos, all things market related. Let's get to it. Big announcement for today, 5 p.m. Eastern time. Look for Module 1 of my best trading strategy. It's going to be an overview, but it gives all of you a chance to give me some feedback, give me some comments, like, subscribe, get ready for this video series to come to you live over the coming weeks. Keep it seriously simple with a sneak peek today on Trendline. So that's dropping at 5 p.m. Eastern time. Make sure you get over my YouTube channel and check it out. If you're out there wondering how to follow me, here I am on social media, pulver.chris on Instagram, pulverchris on Twitter, and just type in my name, Chris Pulver, on Facebook and YouTube, and you can see me there. So like I said, leave me a like, leave me a comment, subscribe to my channel. Let me know what you'd like to see in coming modules, but specifically I'll be talking about equity management, support and resistance, trend lines, price action, structure, price patterns. I'm also going to spend some time on broker-related things like navigating a broker platform, how to use a broker platform, buying and selling, stop and limit orders, double-checking your margin, understanding what it is per pip for the cost and the payout, things like that. So again, leave me some comments, leave me some feedback, and I'd love to add some videos to the bonus section for Keep It Seriously Simple. All right, so let's go ahead and dive into today's Weekly Outlook. This week's Weekly Outlook, it is the week of the 13th of January through the 17th. And here's a look at the news. We are coming off of a holiday weekend for Japan. Last week on Friday was non-farm payroll. Quite a reasonable miss for average hourly earnings for the U.S. We forecasted 0.3%, came in at 0.1. There was also a miss and negative revision. So we had 162 forecast, it came in 145. We also revised down from 266 to 256, although the unemployment rate stayed the same at 3.5. But for the most part on the job front, BIS. Now, we are not seeing a ton of reaction. That really, I traded it live with traders on Friday. It was kind of lackluster. I traded it small. I'm just kind of getting settled in for the week. And we have so many bigger plans ahead for the year that I wasn't going to let one little news announcement be a make or break for my week. So I've got a lot of positions that are still being nursed through the holidays. I'm holding on to a lot of Aussie pairs. I'm still long Aussie CAD. I'm still long Aussie Swiss. The JPY continues to be the weakest currency pair. So we're actually seeing some pretty decent trends out of the JPY with JPY weakness. So Aussie yen's trending higher, CAD yen higher, Euro yen higher, New Zealand yen, pound yen, dollar yen. And the Aussie starting to come back a little bit, which is nice to see. So we'll talk about those in just a few minutes. But coming into this week, a fairly light calendar, things I wanted to point out. We have a bank holiday in Japan to kick things off with Coming of Age Day. The week really kicks off Monday. Bank of Canada Business Outlook Survey, New Zealand dollar, business confidence. Again, JPYs have been trending weaker. Dollar has CPI this week. Monetary Policy Committee from the UK, that's member Saunders speaking. Also, we have CPI news, that's yearly CPI news out of the UK on Wednesday morning at 4:30 a.m. ECB monetary policy meeting accounts. Now that's Thursday the 16th. This is not a press conference. This is not a rate decision, but I'm curious to see if this actually gets any spark in the euro. One thing that I've been looking at with my team this week is some type of top or bottom forming in the euro dollar. So when I get to the charts in just a few minutes, let's keep an eye on that euro dollar and that dollar index because I think those are going to be some nice correlations that we want to watch for. Again, more U.S. news on Thursday, retail sales. ECB President Christine Lagarde is speaking. That's actually 1 p.m. on Thursday. 9 p.m. we have China news. That's China GDP forecasted at 6%. We're looking at, just take a look at the forecast here, right around 6.1, 6.2. They've come in slightly under. So as expected under, pairs like the Aussie or currency pairs like the Aussie, New Zealand will get a kick out of positive China news. So if we hopefully see a forecast of 6%, we can see the data come in at 6% or greater to keep things on pace. Also on the 15th, the markets may already be pricing it in, but we're supposed to have the official phase 1 trade agreement signed for U.S. and China. Over the weekend, I heard, I think it was Larry Kudlow, I was listening to NPR, listening to Bloomberg. All the analysts are expecting like this is a done deal. Signatures are all but signed. It's official. We're going to have regular talks with the U.S. and China through the year, even though phase 1 might be right now and have to last us until November. And phase 2 won't really be in negotiation until there is either a new president or a re-elected president. We don't know yet, but that's November of this year. So we might be basically banking on the good word of this trade war, this trade agreement lasting the entire year. So hopefully U.S. and China can keep the peace and keep the markets going because right now the markets are shrugging any bad news off and continuing to look for higher highs. Whether that comes to the expense of the Dow creeping up to 29,000, which it did last week and then it retreated, 30,000 is a big benchmark for the Dow. So look at that as, I'm looking at 30,000 as the potential, I'm not saying the top, but just kind of a reason to say, okay, hey, what a great run it's been. How slow is it going to go to 30,000? It might be a continuation from last year's melt up where it was lower volatility, a lot of range-bound trading, but it ultimately gets there, shrugs off a lot of bad news. We don't really see any corrections or dips more so than 5 or 6%, and it just keeps plugging away. But of course, volatility is likely to change this year, whether that's now or into the election or after the election for the U.S. Again, that's it seems like the entire year away. So hopefully we're going to see some pretty clean movement. That's why I've got the watch list put together. That's why I'm watching charts. That's why I'm just getting started. And that's why I'm carrying over some positions, because I was trading the higher time frames last year and I'm looking to stay with them. So to wrap up the week, pound retail sales on Friday. So let's go ahead and jump into the charts. Here is the SPY. So far, just taking a look at the dashboard for the morning, U.S. is opening positive. Futures has been positive as well. Investor optimism nears 2-year highs, warns of stock market pullback. Yes, of course, we have optimism and sentiment and euphoria and greed pretty much at all-time highs. We also show that there is, I read some interesting articles that roughly 40% of the top performing stocks are actually companies that are not making money. Tesla, for example, now is the most valued car maker in the world, only selling like 360,000 vehicles versus Ford and GM, which sold over millions and millions of vehicles. From a dollar standpoint, Tesla actually lost $1 billion last year, while GM and Ford ended up putting profits together of over $10 billion. But again, the market is anticipating future profits for Tesla. Building a gigafactory in China certainly helps. Having China jump on board with electric cars certainly helps. But it's going to be an interesting, I wouldn't be surprised if there's a big short. Tesla has a ton of volatility, but what an amazing run it's been. Just in 2019, the stock is up over 35%. And take a look at what it looks like. If you took a look at Tesla, it's pretty nuts for the last quarter in 2019. You had range-bound conditions with highs around 384. You had a dip where Elon Musk was basically being told not to be chairman anymore, and he had a Twitter rant that got him into some trouble. The stock plummeted to 179, and here we are now staring at it well above $500. What an insane year, right? So, you're talking about 35% from the previous highs, but from where we had the bottom around 180, that is well up. That's almost 300%. That's crazy. Okay, so anyway, crazy stuff is happening out there. Let's focus on what we can do and what we can trade. I'm going to pay attention to the dollar right now. U.S. dollar index. Going to the charts. Here's my weekly chart on the dollar index. We're coming off of equal lows right here. Again, are we going to consolidate longer on dollar weakness that just kind of stays here, doesn't really go anywhere, doesn't get any traction upwards or downwards? Or, again, for crying out loud, just do something. It's like if you're going to hold on to this low briefly for a 1, 2, 3 wave correction, fine. Pull back, form a flat, pull back, find double tops, pull back, hit this double top. But give market makers, give us as traders a reason to see some movement. Get it back to this level. Get it back to this level. Let's go. So this could be a year of a lot of waiting. This could be a year that tests our patience, but let's make sure that we're not missing anything. If this ends up coming back to these highs, this is going to, make traders bite and jump on board and try to get long the dollar, but don't be surprised to see it fail off of equal highs and then give us that reversal pattern that for me, technically, that's what I'm after. So that's what I'm looking for. That's what I love to trade, and that's what I'm going to be planning my year around as far as a big basket opportunity for 2020. Going into gold and silver. Here is silver. We retreated a little bit. Let me go into the daily chart. So daily chart, we actually had a pretty clean break on silver right there. Let me change the color. Had a nice clean break on silver. It is kind of hanging out. We're not above the highs above 1950. We're not to the lows at 1640. I would still buy silver at levels around $16 all the way down to $14. If we can form some corrective move, if we go from low to high and we form some corrections like this and it's very choppy, then I would expect silver to still have a nudge higher to get up towards $20. So I think that $20 is a very real number that we can hit this year on silver, especially if the dollar takes a nosedive. On gold, Gold has retreated off the highs. We end up going all the way up towards 1,600 to the ounce last week. What a big spike on gold. However, that was also a pretty violent holiday run-up. So don't be surprised if with this high and this high that there's actually disagreement between these two tops. So price makes highs, momentum disagrees, and then we end up falling back down. Now, of course, that could paint a pretty ominous picture for a reversal pattern for gold to go much further lower. We could still come back down into these areas to find some massive support. Again, what's the dollar going to do? We will find out, because how it plays in, dollar gets weaker, then gold should go up. Dollar gets weaker, silver should go up. Cryptocurrencies. Bitcoin, for example, watching where we are. You know, this wedge, this is a beautiful corrective wedge. Connect the highs. If we break above, we hit the yearly pivot at 8150. We still have yearly pivots on Ethereum, Litecoin, Ripple, all higher. Bitcoin hit it at 8150. We need to get higher than this area. We had highs last week around 8,300. If we can break above 8,300, close above 8,300, get on the right side of this wedge, this does hopefully lead us to some nice bullishness and continuation back up towards highs at 13,700. Of course, we're looking back at 2017 highs at possibly 20K, which should be a fun run on cryptos. Let's go into currency pairs here. Aussie CAD. Okay, actually, so why Aussie CAD? Let's go US oil. US oil had a big turnaround and a big rejection at that $65 mark. Again, the technicals held. Look at that reversal on that weekly candle. Yikes, high was 65.61. Look at this high over here. The high was 66.50, right up at this same resistance. You see the rejection in oil, and man, did that reverse and the technicals stay nice and sound? Yes, they did. So how do we trade this? Take a look at the daily. Okay, we are right back down to this trendline support that started back in October of 2019. What we need to see, I mean, obviously this is a very sharp decline in oil. If we start to see a very bullish move right away, then we might come right back up and push into these highs around 61. If it is low and slow, if it's high to low and very slow, then expect this to continue to drop. So if we have a bear flag, expect oil to keep falling. Previous support and resistance around 54, but obviously the nice clean support and resistance is sitting around 51. So I do think that oil can continue to drop. If that is the case, then the CAD will get weaker. That should help Aussie CAD get to the upside. There's a lot of range-bound trading on the Aussie CAD right now. I'm just going to look at these highs. I've been leveling myself into these lows. If we hold this level and come all the way back up towards the highs, that's just above 9,100. I might take some profit there around 9,100. We have pivots higher. We have pockets higher. We have all sorts of reasons to think that we should be going much, much higher. However, I also want to make some money. So if I'm getting this trade in, which I did, I got filled around 9,000. I'm filled around 8,900. I have a pending order around 8,880. If we go all the way back up to range highs, I'm buying low. I'm going to take some profit. If it comes back down, I can buy low again. I can try to hang on to something to see if we get a break and go much higher, but I'll still be happy with a run from, let's say, 8,900. We had lows just above 8,900, all the way back up towards 9,150. I'll take range trades all day and buy low and take 250 pips on a base position. So I'll do that, make some cash, and then from there, see if we can break and go on the right side of the trend line. So that's Aussie CAD. Aussie Swiss, I'm also going to continue to hold. With our news coming up with China this week and the phase one trade deal in the works and supposedly and should be signed on the 15th, I'm looking for some Aussie recovery. Again, we'll see what happens on Aussie Swiss. Do we come back into these lows once again before we get a bigger jump to the outer trend line? Do we just sit here and hold these ranges and come back up to these highs? I mean, scenarios are possible, but I'm still looking to hold long Aussie Swiss, especially off of historical lows. Aussie yen, like I said, the Japanese yen is the weakest currency pair. It has been the last couple of days. Take a look at your currency strength chart for this morning. We put in a sharp V bottom on every yen pair, and they're continuing to push higher. So if you are long Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen, Dollar yen, you are making some pips, and they're continuing to carve out higher highs. Aussie's doing well. Euro is doing well this morning, and this is the Swiss as well. So it's nice to see. I mean, the Aussie is the one commodity pair that's actually hanging tough with the others. This is the CAD, the New Zealand, and the dollar in the middle. Then we have the pound and the yen on the weaker side from trading today. But yen continue to push higher. Don't be surprised to see we might even connect these highs on the Aussie yen and have something to shoot for to see if the bulls can score a point just above, it looks like around 7,700, could be a round number. We also might want to look back into previous support and resistance right over here. So we have some nice structure. Past support becomes future resistance. That puts around 7,750 to 7,800. And if you just scroll out and take a look at that larger watch list chart, we're somewhere in here around 7,800 for resistance. Aussie New Zealand, one of my favorite pairs, one of my favorite kind of immunity trades for the year. I'm looking to see how this market carves out some lows and watching this. Can we break that trend line right there? Are we going to continue to channel lower? It doesn't really matter. If we channel lower, 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 then we're going to get a falling wedge. We'll have some type of catalyst like we have here, and we'll end up going all the way back up towards 107 or so. So I will be watching Aussie New Zealand to start getting more aggressive. I've already built a base position on some zeros. I built some base positions around 104 and 103. If we get on the right side of the structure, then I'll look to see where I can add, and look to stay long, going back towards 107 and 107.50. Aussie dollar, I got filled on a trade. Oops, wrong pair. Aussie dollar. I was filled on a pullback for the Aussie dollar. So we're on the right-hand side of the trend line. We have our push pullback. I did buy on the back side of that trend line. Just took a small position. And I'm waiting to see if this trend line support will hold. So we did get a nice retest of the backside of the trend line. Can we hold this level and start to push higher? I'm looking for this level for some bullishness. Now, that might not be the exact bottom. We might have a little bit noisier bottom. It might come all the way back into this low again. Might come back into this low again. It might come all the way back down nice and slow, form a wedge, and then have another push to the upside. But I am looking for this low around 6,750 to 6,800 to hold. And from there, just looking to take it up towards 72 or 7,300 to the upside. That's Aussie dollar. CAD Swiss, not much to do on this one other than wait. I was hoping we would get a more aggressive push to the downside. It just seems like this pair is just loving doing nothing. So we just have a ton of structure. I would even just say, just leave it alone. You know, this might be a more complicated, more boring wedge. I mean, high, low, all this choppiness in here where price really isn't doing much. That's fine. If we even remotely come back down to come near these lows or near these lows, I will probably place a buy trade around 74. In my trading room, I'm looking at levels around 73 and 72 and 71, trying to get some levels in to buy low down near this previous low. But if this is a falling wedge, I mean, that's a good looking pattern. And again, I might buy it too early and it ends up coming down and I sit in a drawdown, but I add more levels, I add more positions. Again, they're nice and small, but it's a test. And from there, I'll just wait. If I add trades and I'm sitting in a small drawdown, I'll wait for this trend line. So if I add a few levels here and then I have a price pattern that emerges and we get on the right-hand side of this trend line, guess what? We're probably going back up. And we can add to these profits and we can enjoy a nice swift run to the upside back towards 76. So the lower this one goes, the more excited I get for the upside move on the CAD Swiss. CAD Yen continues to push higher. You know, looking left on the chart, previous high around 8,500. We're currently trading 8,420. Look for some trend line resistance. We have previous high, previous high. That outer trend line looks to be somewhere around here. I mean, if it's on its current trajectory or takes its time, we're going to be somewhere around 8,600 on that CAD Yen. Swiss Yen as well. I had some interesting talks on the Swiss Yen last week. Currently trading above 113. Let's look at a higher time frame. This one might have room towards these highs around 118. Now, I'm not really that bullish on the Swiss Yen. I'm not bullish on much of anything on the yen. I just don't love trading the yen when it's just slippery and it just seems like, you know, you're buying the yen and you're enjoying like a melt up. Okay, I mean, I guess it's something to do right now is enjoy this yen trade and then run with it until it breaks. But the reality is if this comes back up to 118, guess what I want to do? I want to have a tight stop area and I want to sell this thing as far down as I can. And it might be intermediate lows. It might be all the way back down to the lows. But from 118 all the way down to 105, that's a big sell trade with a lot of profit potential. So, you know, the melt up just doesn't really make me want to jump in and scalp, although it's pretty easy to do. If I use something like Right Trader, for example, and get this linked up, let's go to Swiss Yen on all these currency pairs. I mean, you're going to see some really straightforward trend lines on a 1 hour chart. Okay, 1 hour chart, we've been in the buy zone since we had our sharp bottom on the JPY post Iran and U.S. news. It's been in a buy zone. We had a nice buy opportunity at 112.37 right there at the blue ribbon. That's support, and right there it's up about 100 pips. So you certainly had good opportunities to buy it. You just have to believe that this is the melt up that's going to continue. We didn't really see much change from the end of the year to this year. The melt up continues once Iran and U.S. or the market shrugged off that news. Once a trade deal is looking to be signed for U.S. and China, the market just continues to plug away and continue to push higher. So that should be risk appetite. That is risk appetite. That's why the JPY is showing the weakness that it is. So there are certainly opportunities to participate. I'm just not a big scalper, although that was my opportunity on really any yen pair. If I go to Aussie yen, for example, you're going to see a very sharp bottom on the Aussie yen. Let me switch the time frame here. Take a look. So you see the V bottom. We get into bullish territory. We cross into the buy zone around 7,500, and it's up around 75, almost 7,600. So it's about an 80 to 90 pip move to the upside. Unfortunately, this one has not had much of a pullback, but that's what I look to trade. If it pulls back into this blue ribbon, you're looking to buy this and take it higher, and your stop area is out of the way. So we're trying to recover these highs. We're trying to go after bigger wins than losses as far as dollars and pips. That's good equity management. So that's one way to participate in this weaker JPY. Okay, let's see. CAD or Swiss yen. Now let's go Euro Aussie. I'm going to go back to price action charts here. And Euro Aussie is range bound. Really nice rejection candle from last week. This was pushing up towards the highs. We were just shy of a trade. We have a pending order to sell at 6,365. We ended up just shy of 6,300. Now, I'm still going to keep that 6,365 trade pending. It's a sell trade. If this level holds and it ends up pushing its way back up, we'll get filled at these highs and we'll sell it. The other side of this is if this is still a range and this is still a neckline, then really the trend would be once we break out of this yellow box, we want to stay bearish on this Euro Aussie. If Euro Aussie's dropping, Aussie Swiss is rallying. We're going to win big on this one. We're going to be able to win big on this one as well. So we will make more pips. We'll probably make more pips on Euro Aussie than we do on Aussie Swiss, but I'll probably make more money on Aussie Swiss just because I'm a little bit more confident trading that one off of historical lows. So watching the range for right now, still looking to sell it as high as possible. But if we break to the downside, which is back below 6,000, then I'm looking to stay with a trend to the downside and just go after previous lows. Previous low, previous low. I'd really love to get price somewhere down in here. But again, measurement-wise, high to low, lower high to lower low. Just look for symmetry. If we get to 56 or 55, that's great. That's another nice chunk of profit we can make, and we can continue to evaluate this pair for more gains. Euro CAD. This one, we have a nice little upside move. The group with me in the trading room is in at 4,457. We're up around 80 pips. We are looking to see if this will come down and finish this fifth wave move, but we have also had a lot of range bound trading off of equal lows, equal highs. If we come back up towards 4,700, more than likely I'll protect some profit. That's about 250 pips or so that I'll look to grab. I would like this to get to 4870. If you paid attention to that 2020 watch list, there's a yearly pivot at 4870. So between 4,700, 4870, those are my bullish targets on the Euro CAD. I'm going to look to stay long and just continue to buy low. So I have one position in. If it comes lower, I'll buy it again. I'm going to hold out to the outer trend line, and 47 and 4870 are good targets to the upside. Euro Swiss. Euro and Swiss are neck and neck for profits today. We're still around 10800. This one might just need to continue to drift down towards 107. If we can really create some lows at 107, then I'm looking for this, 1, 2, 3 wave move coming all the way back towards 110, hopefully all the way back towards 111, 111.50, and that's where my profit will be taken on the Euro Swiss. So I'm going to continue to build small and build frequently into 107 to 106 if needed, but targeting 111 or higher. Euro Pound. The pound is on the weak side today. So Euro Pound is heading higher, which is what we expected. We did expect this low from the election to hold and pull back. Now, are we going to pull back all of the way? Are we going to go all the way back up here? Maybe, maybe not. I think that really from the halfway point, if you just look at this halfway point of this channel, this could be something to consider selling, or if it wants to come all the way up, that's fine. I will definitely consider and most likely take actionable sell trades at these highs around 92 and just trade the range. Target 1 is halfway, come all the way back down, target 2, make some range bound trading money on the Euro Pound. So giving this a chance to go right now, but it is nice to see that we are still correcting. That means Euro pound is rallying, pound Aussie, pound CAD, pound Swiss falling, pound yen. Yen is the weakest currency pair, so you're not really seeing much movement out of pound yen, but the pound dollar has dropped back below 1.30. So we are on the decline on the pound right now, which is good because that gives us better opportunities to buy lower. So Euro pound, I want to sell higher. Other pound pairs I'm looking to buy lower, like pound dollar and pound Swiss. Next up, we have Euro Yen. We're going to see new highs in this one. So we're coming back up to retest the highs right here. That's a high at 122.47. Stay in this channel for right now. We have outer trendline resistance and this little sub channel around 124. So I still think there's another few hundred pips to the upside on Euro Yen. If you're looking to participate, again, you can look at something like Right Trader, look at some really simple dynamic support on automated trend lines to buy low. This is a 1 hour chart. We have a buy zone. There's your ribbons to buy dynamic support right around 120.150. That's up about 100 pips. Euro New Zealand. With my trading room, we are long in this right now, and we're playing a really nice daily harmonic pattern, which is right here. So we are bullish on this daily harmonic pattern. We're trying to take it back. Ideally, we're going to take it all the way back to the 618. But the reason we got in this trade based on probabilities is we are going after over 200 pips just to hit the first level. So from this area that we bought in on the pullback, we're looking at about 300 pips to the most conservative profit level. We're looking at about 420, almost 450 pips actually to the second level. And better yet is over 500 pips to the third level. So really nice upside potential on this Euro New Zealand. I don't really care how long this takes. We did get a buy trade in at 6743. We have another pending at 6640, which is off the lows. So we're looking to stay with this. If it hits target 1, then we're going to cancel that pending, and we're going to consider moving stops and taking some profit between this level and the 5.0 and the 618. We're going to take some profit. So it's a good pattern, good upside move, good probability, and we're taking that trade to the upside. Euro dollar. Come on, Euro dollar. Give us something. We're at 1139. Let's go to the daily chart. We have yet to break this level. I still think as a buyer, we have to do two things. The buyers have to see price get above 1200. If we get above 1200, then we can have some fun looking at leveling ourselves in, getting some trades, hopefully seeing some faster volatility to the upside. I would love to see this get back to this area right here. This is around 1700. Okay, all the way back here is around 1700. So that's my bullish target. But I need more confirmation because this could also be just going nice and slow, nice and sideways like so. Comes up again, strikes a point for those bulls, but fakes out and then comes all the way back down. So euro dollar has to do something more exciting. Right now in this little 40 to 50 pip trading range, not really that excited. We still have major resistance around 1200. We have major support around 108, 109. What are you going to do, euro dollar? If you break above 112, I'll buy you. If you break the structure here, I will sell you. Or I'll stay out. Hopefully I get a chance to buy it, and hopefully we have a nice 300 to 400 pip move to the upside. Let's make some money. Let's make some pips. All right, pound Aussie. Pound Aussie is retreating. We have our high low from the election, failure to retest the high and recapture the high, and down we go. That is fine. Look at the bigger picture. Look at the range. Sell high, high, low. There's your swing, selling low. This is coming back to balance out some of those levels from October. We had that huge bullish run in October that was very inefficient. Most likely it's coming back to balance those levels. So again, look at the midpoint of the channel. High, low, lower high, lower low. Midpoint of the channel. That's target 1. If it continues to wave lower, okay, down here to channel lows and then we buy. So if it comes back up, or even if it's consolidated, if we go from high, low, if we make a higher low, expect this to form some type of wedge. You know, I'll be watching this week in the trading room, watching for wedges. If we just keep pushing lower, then we're going to look for Aussie strength to continue. You know, pound Aussie doesn't necessarily have to be the trade that's on our radar when we're making money elsewhere on the Aussie pairs that are much more straightforward. But for right now, pound is retreating. Pound CAD also falling off those election highs, which is good. Fall. Okay, fall as fast as you want. Fall all the way back down to these lows, 6,000. And then guess what? We'll buy it low and we'll take it up. Or we'll buy it low and we'll buy it low and we'll take it up. We'll get a big trade. Okay, so I'm just not overwhelmingly strong or weak on the pound. Right now in the middle of all this nonsense, in the middle of all this noise from last year, I'm only interested in buying it low, selling it high, and I'll let, you know, all the short-term stuff just play out. But I'm watching. Pound Swiss, let it pull back. Okay, this is a nice head and shoulders pattern. I'm looking for a deeper. This is our left shoulder. This would be our right shoulder. We are coming into some pretty good spots. I will be watching for some structure to find a bottom. If this is an A, B, I'm looking for a C to form, which would be nice. I'm going to look to see if I can get some type of bullish price pattern like we have over here. We have equal lows, nice little consolidation. Starts to go to the upside. We can also just look at if this low doesn't really form, then we can certainly revisit historical lows, double bottoms off of this level and buy it nice and low. So pound Swiss is on the radar for something this week. I do have a couple pending buys in with the group around 2,500, 2,550, so I'll be watching that, but that's nice and small. Pound yen. The yen has been weak, so is the pound. This one's not really doing much of anything. Pound New Zealand. Same thing. Off the election highs, 2.0450. We are falling back down. This one may be setting up some type of head and shoulders pattern. And if it consolidates a bit longer, this right shoulder could ultimately push it lower. We could be a range-bound trader, back down to some lows, and we buy low, we take it back up. So if that's what we get pattern-wise, that's what we'll trade. Pound dollar. This one, I would like to see a buy opportunity. I'm just not ready for it yet. I'm glad that it's coming back below 3,000. I do expect off the backside of this trend line to see price come back into like 2,600, maybe even 2,500. Let me use a trend line right in here. So just connect the trend line, and this is where I'd like to see price ultimately fall. High, low, lower, high, lower, low. Come back into this support level. Come back into, say, 27, 2,600. From there, we look for structure. We look for bottoms. We look for this to get on the right-hand side and go back up. If it comes all the way back down to 120, we buy it off the lows at 120, see how high this thing wants to go. So just a big range opportunity is what I'm watching. New Zealand CAD, big range, looking to sell high, looking to buy low. Right now in the middle, I'm going to leave it alone. New Zealand Swiss, hopefully we're going to see a bounce off the backside of this trend line. This is a nice slide to the inner trend line break. If we consolidate here, we should still be pushing to the outer trend line around 66 to 66.50. If it comes back down towards equal lows, I will certainly buy it, take it this outer trend line. I'm favoring Aussie Swiss long and New Zealand Swiss long. New Zealand JPY is trying to claw back at those highs that we had from late December of last year. We're most likely going to overtake that. This is probably going to be one of those flat patterns where we have this big slide, little dip. You buy the dip, it goes up a little bit higher, pulls back in, and then it looks like it's a toss-up trade from there. If we hit resistance, this is probably going to be a good sell zone. So watch for this channel on the New Zealand yen. The channel's actually really clean. If you look at the daily and weekly chart, you got some pretty nice structure right in there for some resistance on the New Zealand yen. So that puts us somewhere around 7,500 for some pretty heavy resistance. New Zealand dollar. New Zealand dollar, let's get a right shoulder. Let's get a right shoulder. So if this one falls a little bit lower, bring it. Previous lows right around 6,500. High, low, lower, high, lower, low perhaps, something around 65. This would be a spot I'm looking to buy. If it comes all the way back down, I'm looking to buy. Right now, I'm of course looking at a head and shoulders. I want to see this move much, much higher. The reality is if this is high, low, high, low, high, low, if we deal with this, guess what? We're going to have to figure out how to trade these ranges, right? We're going to sell high, we're going to buy low. If this support holds, then we're hopefully going to see a break to the upside, and we end up having this big support and big resistance that still plays out the way that we want to. But for right now, I'm anticipating this as a reversal pattern, and I'm looking for the dollar to give us something to trade. If the dollar gets weaker, the Aussie dollar and the New Zealand dollar should be great trades to the upside if we see a sustained weaker dollar. Dollar Canadian couldn't hold the lows at 3,000. We came all the way back towards 3,100. In fact, now look at it going back to indecision. So just a tremendous amount of chop on this currency pair, but the highs at 31.03. We came back in some pockets. I think this put in a short-term bottom. I mean, look, I'm not doing anything magic here. I'm literally just connecting highs, connecting lows, and price continues to bounce off these levels. So it's probably putting in a bottom here. We're going to come back up into this area, watch for 3,300 to 3,350, and this is just range-bound trading. So that's the new normal. You know, if you want to make money in these markets, you got to trade what the markets are giving you, and that's all they're giving us is a lot of range-bound trading. So beggars can't be choosers, right? Dollar Swiss. Range conditions coming back down towards the lows around 96.60. Just going to hang tight on this one and hold for some bigger buy trades, 95.50, 92.50. Ultimately trying to get back to 1.00. Dollar yen It has made a new high. Dollar yen is plugging away higher. We took out these levels at 109.60. We're well on our way to 110. In fact, I've been talking about 112 and 114 for really most of last year. And you can see that we have a ton of resistance here at 114 and a ton of support at 105. So if we make the good journey to the upside, we're either going to hit this resistance, hit this resistance, hit this resistance, and start to fall back down, or this will be a horizontal level, resistance at 114, 114, 114, and from there, it's either we break and keep going, and this party continues, or that's the rejection, and this gets weaker. Again, the dollar has to be a factor in here somewhere. We're not, if we see a weaker dollar and a weaker yen, I don't think the yen's going to be that weak to allow this, to rally all the way back up to 120. I think we're going to be confined, especially with an election year. 114 to 105 will most likely be visited. In fact, we might visit both of them this year. Just depends on how fast the volatility is. But I'd say right now the JPY continues to stay weaker. It seems like a great party going on in the global economy and the stock markets. Whether you believe it or not, it's still going, right? It might seem ridiculous. It might seem far-fetched, but it takes a lot to turn the Titanic. And that's no pun intended, because I'm sure there's an iceberg out there waiting somewhere in the global economy, but it's not there yet. So the JPY stays weaker, which means Aussie yen, CAD yen, Euro yen, Swiss yen. I mean, the yen is the trending pair right now, and dollar yen is trending higher. Okay, dollar peso. Dollar peso just slowly breaking the structure here. Here's what I'm watching for. I mean, we are taking out these lows, which is kind of nice to see if we can come back up to retest. I'd like to see a failure here and see if we can take this sell trade. I looked at this last week. This is around 10,000 pips. So if we can get a nice, and what I'd actually like to see, if it pulls back, that's fine. But ideally would be something like this. If it just sits here and consolidates a little bit off this trend line, then look for another push to the downside. Okay, but I'm thinking the peso, it might be ready for a fall. It favors positive rollover if you are holding short. It just hasn't really been the same currency pair. So watch this level. If it has a very sharp move back up into this range, then don't force any sell trades. But depending on what this structure gives us, if it's a little bit lower and then it pulls back up, I'm looking for failure. Try to take that sell trade. If it just slowly pulls back, let's look for some fresh breaks to the downside. So I think the peso could work out pretty nicely. Krone pairs. Again, just kind of waiting for another setup on these. We're back down to channel lows. It just continues to bounce around in a channel. Euro krone, same thing. Euro krone, keep an eye on this one. This could be a great trade. And this is what I typically do on exotic pairs. Look, it's a rising wedge. It's a historical high. It would be fantastic to have this pair do this. Go a little bit higher, and then what? Down we go. You know how many pips we can make there? You know how much money we can make there with that pattern trade? Go from 10.4 all the way down to, let's just say 8.4, right? That's a lot of pips. So look, if we just get back to equal highs and we sell it back down to that level, that's 13,000 pips. So the pattern is there to keep an eye on. This is one pair that, I'll check it during the week. I'll check it with the trading room, but we're not going to take a bad entry. I'm not going to sit here right now and say, hey, let's throw a trade on and then watch it go 2,000 pips against us. No, let's see if it uses the channel and comes back up with a rising wedge, and there's a safe way for us to play it. And that safe way to play it is to wait for right now. Okay? And if we wait, it will probably pay us. Comes back up, comes back down, comes back up, comes back down, confirms, and then we sell it, and we get ready to sell it here. We can add more positions. If it pulls back, we can add higher, but we take this trade all the way back down. And I mean, honestly, what if we came all the way back down? What if this was nothing more than a massive historical top on the krone? And this is the high, and we drop all the way down, which is like 20,000 pips. Yeah, that's good stuff. So it's trades like this that we don't want to forget about. Even though this is exotic pair, it pays pretty well. It's not that expensive margin-wise, so this could be a great trade for 2020. And also this could be something that's a little bit, based in with the dollar. If the dollar gets weaker, exotic pairs will really start to move. The peso will get very strong against the dollar. The krone will get strong against the dollar. I think a lot of these have big movements when it comes to dollar weakness. Okay, so oil. Looking to see if we get a bear flag in oil, gold, and silver, watching after some highs and corrections last week. The stock market continues to plug away. I think that 2020 is going to be a year where, hedge funds and the markets are grasping at straws and grasping at gains. It may take a lot to derail the markets, but it's going to be tough sledding for gains. So 29,000 on the Dow, 30,000 for the Dow, all are big levels, very ominous levels. Be prepared. we could have a very different conversation 12 months from now, 24 months from now, but there will be writing on the wall. We have been talking about this. It's the canary in the coal mine. It's just, especially when it's the type of environment of the market where you can be absolutely crushed or you can make a fortune. So let's be on the other side of that, right? Let's make a fortune. Let's make a ton of profit because we see this is happening. So it might be grinding our profits right now. It might be low and slow and you're in the markets and it's exhausting. But when we start to see big movements, more volatility, we have to be ready for that. And so I'm prepared for the worst, but I'm planning for the best. All right, and you should do the same. All right, traders, that's it. So one last thing to wrap up this weekly outlook. Remember, at 5 p.m. today, look for Module 1 of my Keep It Seriously Simple strategy video. So that is going to be dropping on YouTube at 5 p.m. Again, subscribe to my YouTube channel, leave me a like, leave me a comment, and give me some feedback because I'm asking you what other videos you'd like me to post. So I have a set module that's about 6 or 7 videos, but I will definitely go into more details. I'll do other things, so keep that feedback coming in, and I'll take those questions and comments, and I'll put in some bonus sections. So, all right, traders, have a great day, have a great week. I'll talk to you soon. Bye.